My name is Lindsay Duff, and I'm here to talk to you today about responsible day trading. Guys, no news today, no news tomorrow. Wednesday, we got some news, and Thursday, we got some news. Basically, no news today, which normally would, in my opinion, would kind of coincide with things being running a little bit slow. But it seems like we've had a lot of good activity today. So let's talk a little bit about it. So here we have our daily chart. If you're new to this, which I know a lot of you guys here are not, but let's just go ahead and talk through it a little bit. Each bar on here is just 1 day's worth of activity. So we can see what the overall move is while we may be looking, and over here to my right is my 233 chart, which is one of our most immediate charts that we have. So we actually may have some different direction. We might have some like strength to the downside on the 233 that isn't shown on the daily chart, and that's okay. We're still able to use all of these pieces of information while we're going through this kind of thing. I was talking about these EMAs first being strong, wide, spread apart. So what are we noticing right here at the MACDs? We are sitting at the zero line, which typically we would say, okay, we're at the zero line, we're at the bottom Bollinger Band. I'm sorry, we're at the bottom EMA. We'd be thinking about the possibility for a bounce to the upside. But I'm looking at, so that's what we can kind of see right here. Now, this BB right here, what time is it? It's 1 o'clock. We've got a couple of hours before the end of the day. This is what we call our live MACD BB dot, which means the live MACD BB dot is pulling apart and pulling back closer and pushing away and pulling back closer. So with a daily chart, you can't get the full picture of the BB dot until closer to the end of the day, because we may see what was a strong run to the downside and create that separation between the two BBs earlier in the day. But as the day continues on, it may get closer and closer and start to look weak and roll to the upside. Both the price and the MACDs here made a lower pivot, which just means they're in agreement. It doesn't necessarily mean that we're changing the market to the downside. It just says they're in agreement. And actually, if we wanted to see something that really gave us the thought process that this was going to move to the downside, we'd really want to see some divergence to say this is trying to make that shift and move the market completely to the opposite side of the EMAs. And remember, guys, if we're going to shift this direction down, we've got to get back below the zero line, not just below it, but below it and pull away. And if you guys have watched the new curriculum that we put through, there's a lot of information about this. And we need to get back below the zero line and pull away, which takes a lot of work. We can see what happened here last time. We got back below the EMA, but we never detached from it. It never pulled away from it. And so you want to see that first bar pull away, kind of like this one. Then you want to see the next bar that closes lower before we can determine if we're shifting our direction to the downside, and the MACDs have to be in agreement with it. So direction is to the upside on the daily chart. We're above the EMA, we're above the zero line. Direction is still considered to the upside, and it will not shift to the downside until we see what we were talking about here. Even though all these BBs got to the downside here, we did not shift that direction to the downside. And if we keep that mindset in when we're looking at those kind of things, it helps us to keep from trying to make short trades right here to push the market down, and understanding why the market went up at that point, or understanding why our indicators told us that the market should have a better possibility of going up at that time. Now, with the 28,657, direction is to the downside. So in the daily chart, direction was up. 28,657 shifted the direction to the downside, and it did it a couple of days ago, right back in here when we pulled away and the BBs got below. It actually shifted the direction to the downside, upside. Yeah, it shifted to the downside, upside here. It did shift to the downside here, shifted back up and shifted back down. Now, whenever it's shifting up and down in these situations, guys, we're not necessarily using the EMAs as areas for a bounce for support and resistance until we can clear where we had this nice little area that we were trapped between. We cleared it, we pulled back to it, and it pushed to the downside. So pulling into these EMAs that said more down, it's attempting to make this move back to the upside. Has it? Definitely not. Is it attempting? Yes. And why is it telling me that it's attempting? Well, it's gotten really, really far above the zero line. It's got a really good distance above the zero line. We did not see that separation right in here. So if we want to see this to be able to make its way back above, we cannot cross this bottom Bollinger Band. We cannot cross the zero line. I mean, we could cross the bottom Bollinger Band. We definitely don't want to see it cross the bottom Bollinger Band if we're going to anticipate this to go up more. So it's trying so hard. Now, had these BBs, had this second round of BBs been leading lower and given us divergence, automatically my mindset would have been like, okay, this area of the EMA is holding. We're shifting back to the downside. We're shifting back where we're pushing down further, but that has not happened. We did not have any divergence here. We did pull up to the EMA and made this tiny little bars, which those tiny little bars are good indications of the push back down. And so it's kind of just trying to make its way. Direction is still down. It's trying to make its way. EMAs are still open to the downside. It does need to do some work to get back below the zero line here if we're going to really anticipate, if it pushes to the downside, to see that continuation in that movement to the downside. So now I'm going to move to what we use as our trading charts. Personally, I'm using the 10-946, 1597, 233. When the market is moving really, really slow and we're not creating a lot of distance, I can promise you right now, I'm moving the 1597 here. I've got the 610 here and the 233. So we just kind of pull it in and shrink it down a little bit and say, okay, what are we looking for just in the immediate? And you don't get as big of targets with things like that, but it does give you more opportunity to be part of the movements that we see. A lot of times what I like to do is take that second move that happens right in here as it pushes down and pulls back. One of the things with this particular move right here, guys, and let me see if I can see where it's happening. Yeah. One of the things with this particular move right here to get these pullbacks, yes, you have a lot of strength happening on the 233 right here. It's actually pushing back to the upside. If you're expecting this move to work out and really, really push you through, you need strength in the 1597 MACDs. Okay. So write that down, take a picture, whatever you need to do. But if you expect these little pullbacks that happen on the 233 to work out on a regular basis, you must see strength happening in the 1597. And I don't see that happening. Now, can you take this pullback and exit here quickly? Absolutely. You know, there is absolutely stuff to be had in here, but don't expect it to keep pushing and working out if you have a lot of weakness in the MACDs on the 1597. Does that make sense to everybody? If it does, just tap me a little Y, something like that. But there's not a whole lot of hope for any of these right in here working out with your moves to the downside when the MACDs are looking like this. Okay, even this one right here, even this first little pullback happening here, it doesn't give us a strong follow through. Why? Because the MACDs don't even roll over and cross that bottom Bollinger Band. So we have to keep those kind of things in mind, that if I'm anticipating this to continue, that I need more than just the 233 telling me that it's got strength to continue. Even right here, if I'm just looking here at the 10-946, sure, it is outside of the Bollinger Bands. Yes, the BBs are purple and down. Something we need to understand about the 10-946, if you guys, you know, are new to this kind of thing or anything like that, when the BBs on the 10-946 have a lot of distance to them, we can pretty much expect some continuation in that direction. The BBs on the 10-946 don't have to switch direction to give you opportunities in the opposite direction on the 1597 or the 233. This little bit of the BBs bunching up together here, let me just even make it bigger. This little bit of the BBs bunching up together, this little bit of the, this is just the tiniest bit of slowdown on the 10946 can give us opportunities on things like the 233. Divergence there, white BBs, distance to run back to the EMAs, very weak EMAs tells us that we have the possibility for a snapback. Now, a snapback on the 10946 may take a little more time to present itself, right? So while we're kind of watching this gentle giant, like I like to call it, slowly roll over, our smaller charts are starting to say, hey, pay attention, starts to struggle to move up, not leading higher in all the MACDs. It starts to give us, and I know Dan has heard me say these words 9 million times. Usually, a lot of times, right before the move in the opposite direction, it does something what I like to call bring the drama, right? So it brings the drama. And so it wasn't pushing through. And then drama is kind of like that last little pullback, right? Like that big dramatic pullback that happens. And when that happens right up in here, the MACDs can't even get anywhere near that top Bollinger Band. Trying to cross that bottom Bollinger Band. Oh, this one's much better. So we have this little bit of a pullback happening right here. What's happening with the MACDs? Can't even cross that top Bollinger Band. Right? Can't even cross that top Bollinger Band as we're pulling back into the EMAs. We've got some head and shoulders here. We have strength that has moved to the downside. The retracements have been very weak to the upside where we can't cross those top Bollinger Bands. And this one actually allows you a lot of opportunities if you miss the first one. We have the pullback that happens here. Nice flag reversal bar rolling inside of the Bollinger Bands. So you have right in here, you may have attempted to take it here, which I think is not a bad idea. You just need to make sure if it's too far down, it may come back and stop you out here if your risk is not far enough. Now, if it does come back and stop you out, gives you another opportunity right there. I think that is the hardest part, guys, of this whole thing is getting stopped out and having the confidence to get back in again. There's another opportunity as it pulls back in here. Would have been a great opportunity taking it down. You might have had a little bit of a struggle right in here when it popped right back up so fast. But, part of being the type of traders we are is we're going to take losses and we have to deal with how losses are. So we're either going to have to deal with how the loss is, or we're going to have to move. We're going to have to just be comfortable with moving our risk quicker. There's all different types of ways of thinking of this as you're going through it. None of us are going to trade exactly the same. So what works for you may not work for another person. Daniel, yeah, I'll lose when I win after 2 hours of screen time. Yes. And you know what, guys? One thing that, if there's anything I've learned by being in this business, we're trained to think the more hours we work, the more money we make. And that's just a lie that we tell ourselves, right? We have to pay attention to, how we're feeling and things like that, because that will affect it. And we have to pay attention to am I being greedy? Sometimes I have to say, if I have one trade that makes me something like $1,000 or whatever, sometimes I'm just like, okay, that's it. Because if I sit here any longer, I'm going to give that all back trying to make more because I'm feeling so happy, and so and it may be a 15-minute trade, and it takes a lot of discipline for me to say, okay, Lindsay, shut it down, go work on something else. And I have to close everything. I cannot leave it open in the background. I cannot have it just running back here and say, okay, well, I'm just not going to pay attention to it. I have to close it and I have to put it away. Otherwise, I am going to come back to it. It's going to happen because we are human. I'll have to do something else while I let something interesting happen. And yes, I will do that. Now, do I open it back up later? Sometimes, but I have to be in the right mindset to open it back up later. I have to already be done with whatever it is I promised myself I was going to finish. And if I open it up and it's moving about like it's moving right now, I close it immediately. Chuck says my biggest fault was letting it run in the background after taking some wins. Come back to my desk and say, oh, hey, let me take one more trade. Chuck, you're officially a day trader because that happens to all of us. And then that, oh, hey, let me take one more happens to be a loss a lot of times, that first one. And then you say, oh, hey, let me go ahead and make back the money that I lost. And then you're going to lose the next one because your mindset is on making the money instead of preserving the money. Daniel, you know what? That's why we do these things. It's good to know that you're not the only one. And that's why we do the things like the trader meet and greet. No problem, Danny. Good, Chuck. We can start a support group. I think that's what we are. We're the RDT support group. Yep. Tiny little bar starting to push down a little bit more, but we're gonna have to break through here.
Mm-hmm.
And here's the other thing. I'm still looking at this. We still have 17,000 ticks. It does look like it's trying to push down further. But that's something that used to get me in so much trouble, guys, is not paying attention to how many ticks were left and making the assumption that what's happening right there and right then was going to be how that bar finished. And so with these 17,000 ticks, this BB could literally close all the way up here if it wanted to. Guys, before we go, let me actually just last few things before we roll out. I think it's the 19th. So next Thursday, for those of you who are in town, it's going to be at Wakefield Crowbar with Updog on the north side in the Heights. Corey, I know you're going to be there. Corey's been showing up early, and it's been really nice having Corey there. Chuck has been coming. Tim got to come to one. A little T-woo action. Free to send in any questions you have to support at Responsible Day Trading, to info at Responsible Day Trading. Either of those you can send in and we can get you some help if you've got any questions. If you're not currently a student and you wanted to learn a little bit more about things, definitely reach out and contact us. Also, if you are looking to join, if you haven't already, we have the core part 1 and the core part 2. So these are some really great parts for you guys to look at. We do have the growth and development and coaching and mentorship. And here is our packages. We do have an independent study program that you can do if you want to just work on your own. We have the essentials, the total package, and the VIP. So you guys feel free to look through those. If you need to know some more about Spanish, there's there. We do have more information about the individual courses here. So this section goes up through MACDs. This goes up through Divergence all the way through. There's a lot of good new information in here, guys. So if you have been with us for a while, please go back and look at core part 2. There's homework in there for you to do. I just want to come over here to look at part 2. So you guys can see what we've got in there. So there's a lot more about Divergence. And we do talk about the white MACD BBs, which we didn't before. Then we go through things like being on the correct side of things, knowing the direction. And we have some homework for these as well, knowing about anticipating areas to break or hold. The signs of struggle and strength, Dan really put a lot of work into that, and it is great. Or was it the signals and patience? I think.
Signals.
Whatever it is.
You did
a good job on all of it. Don't but here we talk a lot more about risk to reward and different ways that you can manage your risk to reward. If you are looking for, trading more contracts at one time, all those kind of things. And then we have some more information over signals and patience. But over here, you're going to get a lot more information. We do have a few things that we pulled from the Ninja Trader platform fundamentals, things like setting up the ATM strategies in Chart Trader, market replay walkthrough, live trading videos. There's these great signal and patience videos that Dan's gone through where they're him trading and he's stopping and talking about what's happening and the thought processes that are happening there. So, all right, guys, that's going to wrap it up. Thank you, Mr. D. I hope everybody has a great week. We're going to have next week. I'm not sure who's running the class next week. Cesar said he thinks it's him. All right, cool. All right, everybody, have a great week. And if you got questions, let us know. And I have no idea how to end this. So
I'll do it.
I guess. Okay. All right, guys. Everybody have a great day.
Cheers. Bye bye.
Bye.